Welcome back everybody. So this is gonna be a quick update video for you guys on stock market, and before we get started, please smash that like button, and 100 plus likes on this video would be greatly appreciated guys. And if you're new here, consider subscribing. Now if you want to get my daily trade ideas, swing trade ideas, live trading, and you want to support the channel, definitely check out their link down below in the description for Patreon. All right, welcome back everybody. So finally we got Dow Jones getting a green day up 1.18%, Nasdaq going up 1%, S&P going up just over 1%, and Russell catching a breather also in the green 0.94%. Here's 11 sectors that makes up S&P 500 on top, leading the way real estate, utilities, technology, financial, industrials, basic materials, energy. On bottom, consumer defensive, and then we have consumer cyclical. Stock market map, what we got here today on stock market map, Tesla was up all over the place, but at the end, things cannot just go up every day. Gave up all the gains, down 3.46%. We got Meta down 1.73%. Google going up 1.54%, Amazon up 0.73%, Apple up on today 1.88%. We got Nvidia going up 3%. And then if you look at financial here, JPM and some of the other banks, Wells Fargo, and then BRK, all are up in the green. Healthcare, we got Eli Lilly going up. That thing was up like 6-7%. I don't know what happened, gave up all the gains, and then now it's only up 1.35%. UNH, that's the one that I'm still in, and I'm going to hold long term, up 2.22%. So fear and greed index, well, we're hitting fear right here, almost 25. Number is 28, but we got really close to 25. So yes, there is some extreme fear, and Jay Powell actually let the cat out of the bag, and that's why we're seeing all that mass in the market. But it was all coming. We all know that it was coming. It was just about time where we're gonna get some sort of a big pullback, like we got back in August, and we got that. Now the question here, guys, is this it? Are we done with the pullback and the rally begins next year, or maybe even next week going into Christmas and then New Year? Or this is just going to be a consolidation week, and then just after New Year, you're going to see the selling, accelerating and going down even more. Now, also, we got some data today, and that was, I believe, PCE data, and it was good. So the market actually sold off. It was a gap down this morning. It was down quite a bit, and then if you look at my screen, it came in actually good. The numbers are good. If you look at my screen, you can see right here these numbers are actually really good, and that's why the market rallied back up. And there is another thing that I want to show you guys. It's not about the data only. It's not about what Jay Powell said. End of the day, guys, technicals, they may not work all the time, but I would say 80-90% of the time it's gonna work. And why I'm saying this, well, it's the Bollinger Band effect, and we'll talk about it in my video with technical analysis starting with SPY ETF. In SPY ETF, it's up 1.20%, and talking about Bollinger Band effect. And if you look at my screen, this purple line right here, guys, it's sitting at almost 588. It was sitting right here at 590 when we got that sell off. So it's been overextended to the downside for past 3 days. And we got a gap down this morning. And what happened? Whenever we get that, we get disconnected from lower Bollinger Band or even upper. We go far ahead from the upper Bollinger Band. We come back in. And whenever we see that, overextension to the downside, below the lower Bollinger Band, we get snapback. And what we got today? Well, absolutely Bollinger Band effect in play, and not to mention those datas also helping out, coming in low, and then we got that rally. But also, bears are in control. And why? If you look at my screen, we got a massive rejection at the 5-day moving average, 595 at the end, sold off, and pretty much trying to hold on to this 50-day moving average, this red line, 591.34. Not quite above this red line, but it's still there. So your line in the sand, I would say 591. If that gives up Monday morning or we get a gap down, then watch out for the next support, 586, and that's going to be critical. We took that out pre-market today, and it was looking like it was going to close this gap early yesterday, but that data just helped out, and then Bollinger Band effect, technicals coming into play and getting that bounce. So these are going to be downside target below 591, 586, and the gap fill at 576.74. We can stay over 591, then watch out for a move back up to 5-day moving average, possibly right here at 595. Over that, we might see a move up to 600 to 601.14 to retest negative sloping 20-day moving average on this daily time frame. One thing I want to point out, yes, sellers and even buyers, we both had a lot of good moment today, but things went up on high volume. So keep that in mind whenever we see high volume. That might be the bottom in the short term, but we have no confirmation unless we take out top of this candle, which is at 606.43 here on SPY. On triple Q, it's up 0.87%. So this one is not looking really good. And if you look at my screen, yes, we got the rally. It's green on the day, rallied all the way up to these moving averages right here near 525. And then what happened, guys? Pretty much gave away half of the gains, more than that, more than half of the gains. Came back in and not even holding this 520, not even holding this 20-day moving average. And now we're back down. And if you look at my screen, I mean, this is looking really bad. There is support around 516-ish, and that is what we're holding, trading at 518.66. But if that's out Monday morning right here, then you're going to see a dump off down to 507. That is where cues were this morning, especially with that gap down that we saw pre-market. So 507, your line in the sand right here on a gap down, unless we can get over 520. In that case, we might make it back up to 525, 527, then 533. Under 515, 516, watch out for the support at 507. And from there, it can go down to this support right here, 503, 500, lower Bollinger Band. And then we have this gap at 492.88. On DIA, it's up 1.24%. So just like SPY ETF, we got the Bollinger Band effect right here on DIA. It was getting far too overextended to the downside. We got a snapback, came back up all the way up to 432, got a rejection off of this negative sloping blue line 5-day moving average, came back and now trading at 428.54. There will be support at 426, 423, and underneath that level, you're going to see a flush down to 416.58. Now, to get out of this, and this can play out over time. You can see we got left shoulder and a head. If this thing comes back up, maybe it trades around, I would say, right here, 50-day moving average 435 to 439, and we can possibly build the right shoulder here. Yes, that could be a head and shoulder pattern, that can actually play out. But also, this does not have to play out. You can just go down or you can snap back all the way back up to all-time highs. We need more confirmation. And how do you get that? Well, we got this massive bearish engulfing candle. We came half away off that candle, and now we're stuck right here at 428.54. So DIA can clear over this candle, which is 438. If that happens, it's bullish. If DIA cannot clear this candle, top of this candle, and it actually takes out bottom of this candle, which it did today, finally we got that snapback. DIA takes out bottom of this candle 424 and then takes out today's low. In that case, we're going to make a lower low, and that could be 416. So we're not out of the woods yet after what 11 or 12 day sell off here that we saw. Finally getting a snapback here on DIA. So we're not out of the woods yet. Nothing really bullish about it. We're just getting a relief rally. So people that are actually getting really bullish, you need to wait for DIA to clear this candle, at least top of this candle, which is at 438, and then you can become a bull right here on DIA. Until then, this could just play out over time, a lot of chop back and forth, and then we will see a directional move, whether to the upside or we break down to the downside and go down even more and get into a really serious correction, which could be 10, 15, 20%. On IWM, it's up 0.94%. So Bollinger Band effect in full effect right here on IWM as well. And you can see it was trading far too overextended to the downside underneath the lower Bollinger Band. We got a snapback, and now this thing went back up to almost 225. And you can see we got a multiple rejection here before, right here near 225. We came close to it, came back down, and now just retracing and holding on to lower Bollinger Band right here at 221.52. So going into Monday session, 221.52, that is going to be your line in the sand, and then bottom of this candle right here, the next support 218. And if that gives up, you're going to see this gap getting filled at 212.78. To the upside, there will be resistance at 225, 227, 230.35, 50-day moving average. And I don't think we're going to clear all that going into next week. And then we can talk about more upside, possibly going back up to these highs again. On VIX is down 24% on the day almost. I mean, this thing is getting decimated, down almost $6. And yes, the market went higher, but I mean, this thing is still over 18. So be cautious over 18 VIX. I mean, just getting a inside day, another inside day inside this massive bullish engulfing candle. So going into next week, Monday, if this thing clears $20, we might see a pushback up to 23 to 26, maybe even 30. But if this thing gets under 18, we all know that that's going to look more bullish for that center rally. I mean, we already got the center rally in my view, but we can still, squeeze some more bears out next week. If this thing drops under 18, that should take VIX down to 15 and possibly even lower. So we're not completely out of the woods yet. Watch this thing next week, and I think this will give us a better direction, what way market will go from here. And that's all I have for you guys in this video. Let me know your thoughts down below in the comment section, and I'll definitely keep you guys updated.